Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for the coming week, and from the United States, we will be waiting for the following economic headers to be released: the new home sales for month of October, CB consumer confidence for month of November, and the GDP quarter to quarter for the third quarter, and the core durable goods orders and the pending home sales. All are considered as market movers. That's all for the economic calendar. We'll move on now to the numbers. On the last week, gold traded between 1456 as a low of the week to 1478 as a high of the week. Numbers are rounded and the market is closed. Gold spot printed a closing price on the last trading session of Friday above 1461. The number is rounded and the market is closed. Gold is trading in an uptrend, and as you see, it's below its all daily simple moving averages except the 200 days daily simple moving average located about 1418, and the momentum is seen weakening. For the RSI readings, it's 39 bearish on the daily chart, 53 on the weekly, and 62 on the monthly. And for the supports are seen about 1446, followed by 1434, and then 1418. And for the resistance levels, it's seen about 1476, then 1488. If it cleared, then 1500. That's all for the numbers. We'll move on now to the trading strategy. Hi again. The market of gold and silver is continuing its decline, and it ended the last trading week with a shooting star on both daily and weekly charts, indicates of further decline ahead of us. This is something we do know, as we talked about it in our previous video, and we said that most likely gold is going to decline down to its 200 days daily simple moving average. The interesting part and the thing that we did not talk about, that there is a narrative somehow is getting prepared for both gold and silver and precious metals in general to have a huge rally after bottoming. Reports that trade deal won't be signed by December as expected, and other reports that a new set of tariffs could kick in before the trade deal is signed on December, if it's going to be signed on December. And on the 15th of December, there will be also the Fed meeting, and there could be an indication of an upcoming rate cut, though we know that the Fed Powell in his testimony and in the FOMC statement, there was like less probability of further rate cuts, but you never know. Those are enough factors, in my point of view, to fuel a new strong rally in gold. Just we need to know where the bottom is located. Technically, gold is in an uptrend, and it will be in this uptrend as long as it's above 1450. Now, gold is below the 20 days, 50 days, 100 days daily simple moving average for the almost 3 weeks so far, and we are looking for a further decline that could take gold to the 200 days daily simple moving average located about 1418. We take also an average of 1 to 3% additional decline, which is usually happens when any rally reach an end in gold, which will take us to around 1390, an average of 1 to 3%. That where in theory is the market bottom. This is the most appealing case for gold, in my opinion. Any upside move should be treated as a great selling opportunity. Gold without a close above 1483, the 50 days EMA is a sell. And if a close happened above 1483, it's better to wait a close above 1517.8 to restore the bullishness about gold. This is for the short term. And the long term, gold is bullish. It's in a long term bull market, and it's going to rally, as I believe, as soon as we head into December to January. I bet like 90% on the favor of a decline toward the 200 days daily simple moving average located about 1418 and even below toward 1388 or 1390. That's for the coming week. That's all. Thank you guys. I'll see you in another video next week.